please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Well, it's Fortis on our minds, and a big development ahead of the Fortis board meeting today to decide the buyer. Large FIIs have actually asked for an EGM to dismantle the present board. Meanwhile, the suitors have been actively pushing their offers with revised bids as well. You just heard it out from Sunil Munjal a couple of hours ago on the latest offer that they put out. Nisha joins in. Nisha, this is really getting so convoluted, but of course we'll understand a lot more details today after the board meet.
Yes, that's going to be a big suspense, and that suspense is really building up. I gather that the board meet hasn't yet started. There is some discussion before the board meet, and the board is really huddling to know what can be done at a time when, remember, 12% of the FIIs, the shareholders, have shown no confidence in the board and have gone ahead and asked for dismantling the present board, and have even suggested 3 independent directors. Names being Shubhalakshmi Chakravarti from the financial services background, Ravi Rajagopal, who was with Diageo, as well as Indrajit Banerjee, who's a management consultant. So these are the 3 names which have been proposed. At a time like this, the decision by the board is going to be extremely critical, and what they had earlier thought of also deciding on today was the offers, the 4 offers which have come in, and there's a lot of activity on that as well, because Munjal and Burman have really upped the ante and have gone ahead and revised their offer. So it is a binding offer now with 161 rupees 60 paise per share, which is the highest valuation that is given by any of the 4 bidders which are in the fray. Now remember, TPG Manipal has also been there. IHH has also revised its offer today, but it is contingent on a due diligence process for the company, which will take time. And Fosun, the Chinese company, is also in the fray, but that also is dependent on due diligence. So there are 4 big offers to really decide from. But the big question is here that if there is an attack by the shareholders, and if whatever the board decides do not pass the muster at the EGM by the shareholders, then can the board really take a decision today? That's a big question that we are really focusing on.
All right, thanks Nisha so much for that. So plenty of action and drama lined up ahead in the Fortis saga. Well, we did catch up with Sunil Munjal on that revised offer that the Munjal-Burman combine has made for Fortis. Take a look.
We believe we already had a very good offer that we had made, but because partially of the multiplicity of offers coming in, and also looking at the need of the company, we've revised the offer to make it even simpler. We've increased the upfront amount. I think the company both deserves and needs the both the higher quantum of funds and the urgency of getting it quickly. There has been a call by some of the shareholders to replace the board, and for a company of this size, the board potentially probably should be larger, but today the board is what it is. So we are dealing with the board as it is. We've asked for seats on the board already.
Okay, well, that's Sunil Munjal of the Hero Group talking about their latest bid. But let's get back to the markets now, because the space that's really on fire this morning is metals. Vedanta is now up almost 6%. Hindalco is also moving with so much strength. Ashwini Gujral is back with us. Ashwini, before I ask you your view on the index, just to follow through on the discussion we were having on metals earlier in the morning, even if someone has perhaps missed out on the rally so far, does it make sense to buy afresh?
Most metal stocks are up, 6-7%, and this is on the back of already large rallies. So maybe Vedanta you can buy, because today is the first day it's really rallied, and maybe if this metal rally continues, you could get 340, 345. Hindalco has been rallying for a few days, so maybe that's not a good choice. Tata Steel is just about starting to rally, so somewhere steel is now just beginning to rally. So JSW Steel or Tata Steel, these stocks probably have more upside than maybe a Hindalco.
Okay, well, speaking of rallies, another big boy, L&T, days high. It's contributing to the gains at this point in time. Ashwini, what's the read-through otherwise so far? I mean, it's again the same situation playing out where the banks aren't really doing their bit. But as of now, others are participating, whether it's some buying in IT, metals we spoke of, and even others like ITC and L&T. So what's the reading on the index?
the issue is that others have been going up all morning, but the index hasn't gone anywhere. That means it is being balanced by selling on financials. Now, like yesterday, today also the cookie will crumble post 1 o'clock, where one side will take a decisive move, and because metals and IT and everything else has rallied, so the place that's left is financial. So which way the financials go, that should be important. They are hanging around, precariously at the lows yesterday and today's lows. So in case those lows start to get taken out, only then you should go short. It's clearly, the question is now in the hand of the yield. It's back above 7.6. If it goes up further, I think NBFCs and financials will come under pressure. It's clear large banks are getting sold by, probably large investors.
Okay, well, by the way, these OMCs that we've been discussing, IOC, HPCL, BPCL, have all hit new 52-week lows today. So that's the kind of pressure that they've faced. All of them have lost about 30% of their value in this year so far. Not ONGC, HPCL, BPCL, IOC is what I'm talking about. But Ashwini, what are the individual stocks that you would look at?
Since, there are two different markets, one which is the export sector. So if you have to be long, you are long on JSW Steel, that's a buy with a stop of 314, target of 332. Tata Elxsi is a buy with a stop of 1070, target of 1120. And Hind Copper is a buy with a stop of 76, target of 88.
Okay. All right. We have some questions on Twitter coming your way, Ashwini, so please do take them. Piyush has 65 shares of Automotive Axles. His price is 12.10. That's his entry point. He wants a long-term view on the stock.
See, Automotive Axle is consolidating. It's corrected. 1400 is the low of this correction, so well above his purchase price. I think it can get back up to 1750, 1800. So that way he has no problem in holding. And, automobile ancillary is a hot sector in India. So I wouldn't be surprised if it crosses 2000 at some point.
Markets holding up, banks are dragging, but there are other components that are adding up in favor of the bulls, at least right now. Let's get a conversation going with Vaibhav Sanghvi, co-CEO of Avendus Capital Alternate Strategies. Vaibhav, good to have you on the show. So we've been in an interesting patch, an uptrend pretty much that's taken us close to the doorsteps of 10,600. Do you think the worst of the negativities is priced in? Or now with crude prices being where they are, there's a fresh risk to this small up move?
Sure. So, Surabhi, I think, we've rallied smartly from the lows of about 10,000 to now 10,600 odd levels. In anticipation, partly due to, that the quarterly numbers are, likely to be good. And as usual, you will see that the first half of the quarterly numbers would be better than your second half, which actually will aid the sentiment to an extent. However, as you rightly mentioned, all these factors, including your 10-year bond yield plus your crude, as well as your US 10-year, which is now close to about 2.86 again, those are the factors which we will see it pretty closely. So, just to sum up, I think the short term looks pretty okay in terms of sentiment on the quarterlies, but medium term is something where we think the volatility will remain intact over a period of time.
Okay, Vaibhav, hi, good afternoon. I wanted your thoughts on how to approach the IT space now, because large cap IT names like Infosys, etc., have talked about some margin pain, as they make that transition to more digital services. But mid cap IT has been doing really well, whether it's Mastech, Mindtree, etc. How do you approach this pocket now?
No, I think, we have been, speaking on the channel itself that, we have been very, very bullish on the IT space on an overall basis. Now, a couple of reasons. One, that we clearly believe that the business has bottomed out in terms of the growth, looking at the higher tech spending. At the same time, currency depreciating, which we have been witnessing over the last, a week or two. We clearly believe that there are some amount of tailwinds on the margin. Now, having said that, if the companies, if they have guided towards the lower end of the margin, we think that that will pretty much get compensated, due to the depreciating currency. So I see, one, that the revenue estimates might move higher as we progress during the year. At the same time, because of these currency effects, we think that the margins would be pretty stable. So we will see, good opportunity in the IT space, both large cap and mid caps.
Well, one space in the market that everybody's been trying to get onto is obviously consumption, even at elevated valuation levels. How do you look at the theme right now? Which way are you cutting it? Which parts of it are you willing to play even at these prices?
No, we have been fairly bullish on both on consumers across staples and discretionary. However, staples on a optically looks pretty expensive, and we would be looking at to add in that space at some price correction if it happens. Whereas in consumer discretionary, I think we continue to be bullish on autos and paints as well to an extent. So on overall consumer space, we think that's a quite stable basket in the light that there may be some amount of global variables affecting different sectors, but this is insulated from those kind of volatility, and we'll continue to have a bullish view on this and a constructive view on this.
Okay, well, bullish view on that some of those consumption stories. But what about metals? Because that space was very active last year. Once again, it's come back on the buyer's radar. Is it time to make fresh investments here?
Yeah, metals, lot is going out, right? I mean, a lot is happening out there, on the global scheme of things. One, right from trade sanctions to what's happening to Rusal, and seeing the LME prices, right, which are extremely buoyant. Now, huge amount of sentiment is affected, on the positive side by these developments. Having said that, one has to understand that it's a cyclical industry, and what is the valuation which you will give for a longer framework of mind is something one needs to keep into account. Short term, however, as you rightly mentioned, I think we are in positive sentiment territory, which you are continuing to see into the stock price movement as well.
Okay. Interesting news. That's the global parent announcing a big buyback, 6 billion euros. That's Unilever PLC for you. Of course, not much for the shareholders here just yet. Anyhow, Vaibhav, to get back to the conversation here on earnings itself, do you expect any pocket in Q4 to spring a positive surprise? Because we have gone into the season with fairly elevated expectations anyway.
So I think one space where you see very buoyant numbers is some out of retail private banks where and select NBFCs where you'll probably see a very buoyant loan growth numbers. Again, those who are capable of lending actually. So I think that is a space you will see some amount of positive surprise. Apart from that, IT, I think, continue to see, apart from the guidance, I think the quarterly numbers should be pretty okay, as well as your consumer space, including your staples. So I think that is a pocket you will see strong numbers, and of course metals and mining, where in the last quarter you saw huge steel spreads, wherein again that is a space you will see some buoyant numbers as well.
Okay. Vaibhav, any thoughts on the news flow that's just coming in? By the way, let me just read it out. Unilever has announced a share buyback program of up to 6 billion euros starting the month of May. HUL actually, I mean, there's actually a sudden uptick that we're seeing on HUL right now. How would you react to this, Vaibhav, and the impact that it could perhaps have on HUL?
I think this is in relation to, if I am correct, I think this is in relation to the global scheme of things and what was happening in terms of the buybacks and corporate actions. So it's nothing to do much here on the current, on the local side.
But I mean, I don't know if you can talk stock specific. Obviously, people are getting excited. No correlation with what HUL does here. But we were just talking about it earlier. I mean, this is stock at a 52-week high. So what would the view be at such prices on the likes of an HUL?
And that's what I did allude to, that the staples are looking very expensive, but that is a space you will continue to see stability, and the return ratios will be pretty excellent. So we are waiting for some correction to enter. We'll just be waiting for that correction, for a longer period of time, I guess.
Okay, well, some more qualitative statements coming in from Unilever. They say that there will be an improvement as far as underlying margins are concerned on a full year basis. But let's go across to Mangalam Malu now to analyze all this data for us. They're also talking about sales growth, etc. So Mangalam, over to you.
Absolutely, Sonia. So, first things first, the buyback, Unilever PLC buyback, the street was factoring in about 5 billion euros. The company has gone ahead and announced 6 billion euros. However, it doesn't make a difference for the Indian shareholders. It's for the global parent, the shareholders of the global Unilever PLC. But qualitative comments coming in. It's the first quarter CY18 results which the global parent has released, and the comments as far as Indian business is concerned, that is pretty cool. The underlying emerging markets have grown about 5.1% volume growth, and out there specifically for India, the company has commented that India continued to witness broad-based volume growth in the South Asian region. Pakistan, they've spoken about, that has shown double-digit volume growth. We were working with anywhere between 8 to 10% volume growth in the fourth quarter for Unilever, Hindustan Unilever that is, but the global parent saying that the Indian volumes have shown broad-based volume growth is something which is a positive.
Okay, so that's definitely getting the stock excited. Anyway, I don't think people need too much of a trigger to get excited about consumption. It has been the best performing space in the market anyway in the last several weeks. Well, thanks Mangalam for that. On that note, and thanks Vaibhav as well for joining in. On that note, let's cut across now to our colleague Ranajoy Banerjee. He is in conversation with the SBI chairman.
Now, because for the past several days now, the country, several parts of the country, at least 5 states have been impacted by this cash crunch. What is the situation as of today?
As of today, there is a considerable improvement as far as the availability of ATMs is concerned. And we are monitoring the situation very tightly. And in all states, all geographies, the position has improved. Average availability of ATMs for State Bank of India, it has gone up from 74 to 82%. In many states, it is as high as 92%. Say, for example, Punjab, Haryana, Jammu and Kashmir. Just now I got a report from my circle CGM from Chandigarh. The ATM availability is 92%. We are waiting for some cash arrival in Bihar and Telangana. That arrangement has also been made. And the position will improve in these states also, I think, latest by tomorrow.
Latest by tomorrow. In fact, you preempted my question because some of the affected states are Bihar, Telangana, Andhra Pradesh. So what are you hearing on the ground? What seems to be the issue there? Was it a case of, ATM recalibration took longer than what one expected?
No, it is not only about recalibration. Yes, recalibration has happened where the new currency note of 200 rupees and ATMs had to be recalibrated. We have already done 32,000 out of 40,000 ATMs which are under what we call CAPEX model, State Bank owned. Another 11,000 are were outsourced under BLA model. So we will be completing this by the month end. And what the cassette configuration as of now would be 2 cassettes for 500, 200 and 100, which in my view is sufficient for the requirements for transacting the business. And in some states like Telangana, although the cash supply has been more as compared to the previous years, but the deposit at the banks, that has been much less. So that is something I think which is being looked into by the agencies and Reserve Bank of India, why the situation is, why the cash is not coming back into the banking system. For the system to run, it is very important that there are regular transactions. Cash goes out and cash must come back, and there should not be any problem, because at macro level, the overall currency is more or less okay, because it is higher than what it used to be pre-demonetization period. So there should not be a problem, but because of, one is that now there's a move that the currency for the public, it will be available in lower denomination. So in some pockets, maybe that has also become the reason.
Isn't it ironical then that the whole idea of demonetization was to push Indians to use less cash? But it seems the exact opposite is happening. Even though digital transactions have actually gone up, but the uses of cash is, as you said, it's pre-demonetization levels. And there appears to be a case where people are hoarding cash because they don't, because there's a fear that, what if cash is not available tomorrow? What does this tell you?
Sometimes psychological factors do come into play, but there is no reason for anyone to worry about anything. That's what I am saying, that it should be business as usual. You take out cash, you deposit cash, but the digital transactions also have gone up very, very significantly. And digital transaction volume is about 1.2 trillion. So that's not a small amount. And as compared to pre-demonetization period, that has also gone up. Economy is growing. If we grow at 7.1%, and that remains the fact that India still continues to be a cash economy. That is the reality. So I think that with the augmented supply of 500 rupees notes particularly,
that is the biggest issue, I mean, currently, 500 rupee notes.
500 rupee notes supply needs to be augmented, and which RBI is doing it, and their press, I am told, are working day and night. So the position wherever, like as I said, that across the country, if I look at the data, and consistently there has been improvement in the last 48 hours as a result of, I would say, better cash management, and the agencies which fill the cash, there is a better coordination. All our currency chests and the currency administration branches, they are supplying cash in the evening as well as in the morning. So there has been a tremendous improvement.
Normalcy by when, you said?
No, it is normal situation, near normal. 2 states still we have to do some work, which is North Bihar, not even the entire Bihar or Jharkhand, only North Bihar, and the state of Telangana, where the arrangement is. I think by today evening we will have the cash in hand, and then by today evening and tomorrow morning we should be able to fill in all the ATMs there. And in these 2 states also position will normalize by tomorrow. That is my assessment.
Couple of last things then, sir. Yesterday, the RBI Deputy Governor talked about that the February 12th circular of that one-day default, that would not change. And that was one concern that many bankers, even companies had, that if there is a default by 1 day, why should you, sort of classify it as an NPA or disclose it? Your views on that? Are you a bit disappointed by that clarification that's come in? How do you see this?
No, I am not at all disappointed by that clarification, because what the point RBI DG made was that the same discipline which you follow for the bonds, and nobody defaults even for a single day, same discipline should be followed for the loans. So to expect that discipline, we cannot find any fault with that arrangement. So what the intent is that there should be a discipline in the markets, and expecting the payment on the due date. I don't see anything wrong in it. And when the companies or the borrowers are planning their cash flow, so they have to plan their cash flow in such a manner that they meet all their commitments on the due date.
Specifically on the resolution plan, earlier it was said that 100% lenders, when they agree on a company going to resolution, only then will it be sent. But now RBI is saying majority, but there is no number specifically. Does that create some confusion?
That is something on which we will be seeking proper clarification from Reserve Bank of India.
Specifically on how many?
On about the resolution plan, that what would constitute majority. That is something we will take up with RBI and seek a clarification.
One final question then on the 180-day resolution, that RBI is indicating that there will be no change to that.
So that is all right. That is whatever is the regulatory regime, you have to follow and abide by that.
6 months?
6 months, in my view, it is some sort of an okay period if all lenders work together, but that means a lot of hard work, building up the consensus, and I think there has to be some sense of urgency when we are dealing with the stressed assets. So the letter and intent and the spirit of the RBI 12th February circular is that let there be some sense of urgency. What happens that in the past, my experience has been, because in many cases we are the lead bank, that decision making in the consortium banking and multiple banking becomes very difficult, and that leads to a lot of delays. So a proper inter-creditor agreement at the time of entering into the consortium, and a discipline amongst the bank when we are working in the consortium and multiple banking, that is also required. So what we have to realize, and people will take some time to adjust to the new reality. After the adoption of Insolvency and Bankruptcy Code and the RBI's intent about making the norms what they should be. These are the norms which are common everywhere, in fact. So there's nothing new. The only difference is that the ecosystem in the countries is different as India. So that is the only thing which I always mention or keep on saying, that the ecosystem also should move in tandem. So if we have banks which are following the international norms, there's nothing wrong in it. But the system to redressal, judicial system, so that also must act fast. And just to give you an example, that in countries like UK, USA, Canada, if you want to enforce a security, that is such a well-defined process. And within 3 to 6 months, you are able to realize on the security. What is the situation in our country? So there are certain ground realities also which makes banker hesitant, or which were making bankers hesitant to precipitate the issue. And the approach in this country from the beginning has been about rehabilitation, about continuing with the venture, try to revive it. And but that system did not work. We had the system of BIFR, but this was also, I would say, it was misused by many people and did not yield the desired result. So if the ecosystem also moves at the same pace as the banking system is being asked to do, then it will yield the desired result. Even in many NCLT cases, we are finding that even after the resolution plans have been submitted, but there is a huge delay in getting the judgments. So that is the ground reality we have to live with in this country. But I think ultimately it is good that we are moving to a system where there is a greater discipline in the
accountability.
Accountability, of course, yes. So in the long run, anything which is happening today, let me tell you, it is a short-term pain. But in the medium and long term, it is going to benefit the entire banking system, the country, and people will adjust to the new ground reality.
That's a message I'll also take to our panel discussion. Rajesh Kumar, thank you very much. Thank you for your time.